That's great. Thank you very much, and good evening, ladies and gentlemen. I'm just going to start with a moment of background about Jadestone and about the team at Jadestone Energy. And the first point I'll make is our origins are a company called Talisman Energy, which was an upstream oil and gas company. We were a production and development company of oil and gas sold into the market through trading houses. Talisman was pretty global before it was acquired by Repsol, a Spanish major, and we spent a lot of time, if you like, learning our skills both in the North Sea and in Asia Pacific. In acquiring assets largely from the majors and further developing and investing in them. And we spent 20 years really understanding how to do that. When Repsol acquired Talisman in 2015, I and most of the team were based in Asia Pacific. And we just felt that there was a huge opportunity to continue with that kind of activity, and it's certainly nothing that Repsol was going to do. And so we established Jadestone Energy. And Jadestone's history was to take on an old exploration, a small company listed in Toronto that was an exploration company. And I don't believe in exploration as a strategy for making money. And for those of you that invest in oil and gas, beware of the one-hit wonders. I won't mention any names, but exploration is like going to the casino, and there is a foundation of technical knowledge, but a huge amount of unknown risk associated with drilling exploration wells, and I just don't believe in that. I am a geologist, and I just don't believe in it. So our strategy is very different, and we'll touch on it in a minute. But I just wanted to give you the background that for a long time we've been building our understanding and our capability in investing in assets, the types of which I'm going to show you. And so Jadestone, taking on an existing exploration platform, we removed all of the exploration licenses, retained a couple of things that we felt had promise, where there was actually discovered gas in the ground, which we thought we could develop. And that was the beginnings. And so in 2016, Mitra, which became Jadestone, because we had to change the name to get away from the image of an exploration company. We had no revenue, no production, and no prospect of it. And so that's where the story started. Okay. If you could read on line 30, no, let's not do that. Let's move straight to the strategy of Jadestone. And our focus is unchanged, as I described from our historical experience. But what we look to do is to acquire assets, preferably with production and cash flow, or which are discovered resources but not developed for some reason, but which can be brought to production relatively quickly in the Asia-Pacific region. And our last 10 years of work was in Asia-Pacific, so we have the relationships established, we understand the basins from a geological perspective, and we have a lot of operating experience there. So our focus is only Asia-Pacific, Vietnam in the north, through Malaysia, Indonesia, and Australasia, not China. We don't want anything imported from China right now. And there are a couple of other countries that we stay away from because the more exploration-driven places like Myanmar. So the idea is, a super major, a Shell, a BP, and Exxon, they take all the risk in new exploration activity. They find and develop large fields, and over the course of production, as it starts to decline, they lose interest. And it's quite natural. because the remaining opportunities in these types of assets, they're just not material enough for the majors, and so they look to dispose of them. For those of you that do invest in oil and gas, of course, you'll know about this in the North Sea, and the North Sea has been going through this cycle of change from the majors to small companies for the last 20 years. In fact, Talisman was one of the first players in that second phase game 20 years ago. We bought our first assets from BP back then. So what we see in Asia Pacific is pretty much exactly what was happening in the North Sea 20 years ago. We're just at that cusp of change where the majors are starting to release assets, and we're starting to get pretty excited about the opportunities. So we set up Jadestone to be a natural counterparty. When those assets come to the market, we wanted to be a company with a capability to be able to acquire them. So with the acquisition of a producing asset, what we look to do is to add value through a number of investment streams. If all you're really good at is taking 20% of operating costs out of somebody else's business, I mean, you've got a great business model and you can predict your kind of returns if that's all you do and you're really good at it and you can guarantee you can deliver it. But if you can do that and you can drill infill wells, increase production, add reserves, extend the field life, if you've got an ability to deploy commercial capability and change the terms by which you operate or you sell the product, and if by any chance you see some small, very low risk exploration opportunities that you can tie back, and you add all of those things together, you can turn a decent returning business into an exceptional returning business. And I'll describe some of the returns that we see on these acquisitions in a moment. So we look to deploy those skills, really the broad range of skills of a much larger company, but to do it, in a small company environment efficiently and quickly. So that's how we think about producing assets. If there are developments that are stranded and we see a way to, perhaps through innovation to bring them to the market, we'll do that too. In the end, Asia Pacific needs energy. It's one of the parts of the world, one of the few parts of the world where the economies are growing. They are energy hungry, and so indeed, not on top of everything else, the terms are really good, and we'll touch on gas prices and oil premiums in a moment. So all of that layered together can make for some exceptional returns and make Jadestone a company worth investing in. Just to talk for a moment about the Asia-Pacific region, it's a series of hydrocarbon provinces, basins, both offshore and onshore, where oil and gas is produced today. There's over 100 billion barrels of oil equivalent that is in production today across the region. And importantly, what this slide shows is where all of that hydrocarbon production is. First of all, the vast bulk of it is in shallow water. I think deep water adds risk, and you think about Macondo in the Gulf of Mexico as an example of a deep water operation that went bad. And so, we tend to think only about solutions either onshore or in shallow water. Secondly, those reserves which are in production are held by super majors and by the national oil companies, and that's they're both a source of opportunity as the one starts to sell because it's just not material for them, and the other starts to sell because there's too much activity for them, frankly, to manage. And in terms of reserves by maturity, what we also show is 80% of that reserve is either in sort of midlife and mature, that time in the field life when the majors start to sell. So the principle to really leave with you is the idea that in Asia Pacific, for a company with Jadestone's capabilities, I have to move on mentally. There's a huge amount of opportunity, and again, if you compare with the North Sea, there's 20, 30 management teams backed with private equity or some other form of financing, jostling for those kinds of activities and opportunities here. In Asia Pacific, there's a handful of companies at best. So it's just, it's a great place to be with that kind of skill and capability. Having ditched all the exploration, what we left ourselves with was up in the north here, 2 gas discoveries from the old Mitra portfolio, the legacy portfolio which we're developing today. Everything else pretty much has gone, and we acquired producing oil, the Stag oil field in Western Australia, Montara oil field in the north of Australia, and late last year we announced the Maari acquisition off New Zealand. This really has transformed the company with production, and last year we produced 13,500 barrels a day of oil from Stag and Montara, and we'll add around 4,500 barrels a day additionally with Maari when the deal closes later this year. So the company is really quite transformed. We'll talk in a moment about what production means in terms of cash flows, revenues, and so on. And as we develop the gas discoveries in Vietnam, we'll see further production growth and also a balance of portfolio away from just oil to a mixture of oil and gas. These are the facilities that we acquired. It started with Stag up in the top left there, acquired in November 2016, only producing around 3,500 barrels a day. It generates free cash flow every year, and we've been working hard on increasing that by reducing costs and increasing production. Montara was probably the transformational acquisition for the company. Stag really set a foundation for us, proving our capabilities as an operator as Jadestone Energy in Australia, which is a really tough regulatory environment. But Montara really was the game changer in terms of value creation, acquired in September from the Thai National Oil Company. And then late last year, we added Maari as an announced deal, and that's moving through regulatory approvals so that we can close that in the second half of this year. So the principle is we are now, I think, at a point where we can demonstrate, deep capability. We have a large operating team operating out of Perth in Western Australia. We have all of the capabilities of a much larger company, as I say, but operating in a much more efficient way. Just touching very quickly on each asset. Stag, it was a very high operating cost asset. We've taken almost 40% of the costs out, and that's certainly improved revenues. Production, which is running in the red line here, has increased quite a lot. And so whilst it's a fairly modest producing asset, it does generate free cash reliably and will produce for the next 15 years or more. Montara, on the other hand, far more material. We paid $195 million to acquire the asset. We listed in London and became an AIM-listed company in August of 2018, raising new equity, $110 million US dollars, and we took out a reserve-based loan to complete that acquisition. And since then, we've been looking at all sorts of ways to add value. And as I said to you earlier, it's a number of different strands that layer on top of each other, adding more reserves, improving the uptime performance of the asset, reducing operating costs, taking out overhead, and so on and so on. And the net value of that activity to Jadestone is $490 million. And so far, just over a year later, I think it's proving to meet all of our expectations. Similarly, on Montara, you can see a lot of cost reduction from where it was in the hands of the previous operator to where we are today, and still more room to go. And again, production, which was relatively low, around 7,000 barrels a day, is now running between 10 and 11 or 12,000. So again, a lot of progress. And then finally, Maari, which has all of the same characteristics in New Zealand. We'll run it with the same team and apply the same skills. Once again, adding 14 million barrels of reserves, but a lot of value. And we paid $50 million for this asset on an effective date of 1st of January 19. By the time we close the deal, I think the seller will be giving us a check as well as the asset, hence 100% IRR. Moving up to Vietnam, this is the southern tip of Vietnam. There's a big power station here. We know the asset that's providing the gas today that fires that power station. The asset's in decline. This is a small development that will tie in and replace that declining gas stream. It's a real must-do project for Vietnam. It avoids the requirement for them to backfill with coal or imported gas. And we're looking for that project to be sanctioned imminently and first gas late next year. So that's the sort of the slate of projects to date. This gives you a sense of what that does in production terms. We've grown production quite significantly, and once we layer on the gas development in late 2021, we'll be producing 30,000 BOEs a day, up from the 13.5 of last year. And finally, in cash terms, well, the Montara, the Montara acquisition at 195 million, that already paid back in the fourth quarter of last year, as we had predicted. The reserve-based loan has been brought down from 120 to 50 million. We have 100 million sitting on account, and so we're net cash positive already. We do spend quite a lot of capital over the next 2 years with the Vietnam development, but even in very low oil price, at $50, for example, we always remain equity free cash flow positive. And then once Vietnam comes on stream and the spending dries up, free cash grows massively. And so, the business is really well set. We see lots and lots of opportunity to do more of this, as I describe. And the market reward since listing in London has been really strong too. All the liquidity is here, and this quarter we will delist from Toronto because of that. And for those, if anybody in the room, and I know one is at least, a shareholder in Jadestone, we returned 170% last year. So it feels like the momentum's building. We're 3 years into the story. I think the opportunity to build a material business is there for us. Thank you.
Most of your assets, would I be right in saying it's P1s or P2s? P2s, is it? P2s. And in terms of your growth plans, I noticed that you headed off all the way to New Zealand. Now, what makes it a bankable project for you in terms of the well size? You mentioned that you don't look for deep water assets. You tend to look for more inshore, etc. So on that basis, what sort of well sizes are you looking at?
So inevitably, as the business grows, like everybody else, the materiality of the opportunities, things that move the needle for investors, grows too. And But just to pick the Bari acquisition, $50 million, delivers for us, a huge amount of growth through follow-on capital investment, and that's where the value comes from. We're taking costs out and adding reserves through drilling wells and so on. And so when we think about acquisitions, it's not the purchase price, although that's important, of course. In the end, it's actually about the amount of reinvestment capital you see in an asset. That's where the value is really delivered. So the acquisitions that we do and complete on, it's because there is far more value creation opportunities. That Montara slide that shows the layers of different ways you can add value. That's the perfect acquisition.
I have 3 questions. Talisman North Sea and Talisman Asia Pacific. What size of did those companies become when you left them? And what scale do you consider Jadestone to sort of... Where would you like to see Jadestone being built to? Similar levels? And then the final question is, why were you awarded an OBE?
Other buggers' efforts. I think it's what it stands for. We were a first mover in the North Sea with this change in sort of thinking about the majors. And when I left, we were producing 160,000 BOEs a day, and I think the market cap of that business was about 8 billion. And we were the second largest operator in the North Sea, and that was a 10-year period. So a phenomenal amount can be done if the market conditions are right. And the North Sea was going through this change. And the point I was making is Asia Pacific is going through this change now. So I think the scope to build a material business is there. Talisman Asia was 150,000 BOEs a day. We were generating $500 million of free cash annually in the end. And an unnamed French company offered $6.5 billion, but the board rejected it. They should have taken it. And to the last point, the second last point. Jadestone could be as big as that, in my view. I haven't set a target, but there's no reason why we can't do the same thing again. And the OBE was for building the first offshore wind farm associated with oil and gas. How about that?
Well, excellent. Good
Thank
news. So, do you pay a dividend? Are you set to pay a dividend?
Thank you.
I'm sure you'd be interested
My
to know.
CFO will kill me for not mentioning it. So this is a business model which is cash. It's a cash generating machine. We absolutely should return to shareholders. We've got a lot of capital in the next couple of years, but we did announce last year that we will pay our maiden dividend this year, and the intention is, once you say you're going to do it, you're going to do it forever. So yes, it's a dividending business, and that's the intent.
Good, excellent. The other question I've got here is, in terms of more acquisitions in the pipeline, is it in the same area as you discussed earlier? Asia Pacific?
Excluding China. I think, this is where our skills are, it's where the team is. The technical office and all the back office stuff is run out of KL. The operating office currently, because of the assets we have, is in Perth, but we have a project team in Ho Chi Minh on the gas project. So we'll stay in that area, and it's a big playground.
There's still plenty of opportunities, basically.
My point that the majors are in full exit mode, and I think we're going to see some really exciting things in the next couple of years.
And the majors know you're on their doorstep.
So we remind them daily. It's our job.
Any more questions from the floor, please? Okay, I think that's it for the time being. Any more questions we can discuss over drinks and canapes? Thank you, Paul.